Hi everyone. Today let's talk about the week economic data. Then we'll take a look at these dumpster fire markets that we got today, down over 2% on the S&Ps. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So weak manufacturing data, once again reigniting fears around a slowing economy. We got ISM monthly survey at 47.2% for August, which was just below the forecasted number, so not great there. We are seeing a contraction in manufacturing. We've been talking about this for a while. Some of the numbers have been decent, but then we got the numbers this morning and now they are not great at all. And remember, below 50% is the break-even point for activity. So below that number is not good. That's basically contraction territory. And what we got today was that 47.2, slightly higher than 46.8 for the previous read. But overall, we were looking for 47.9, did not make those numbers, and markets did not like this. Of course, they were down a lot on the day. And just to make things worse, we are at a 16-month high for input costs, showing that inflation is still out there. So hopefully we don't get that stagflation environment, and if we do, it's going to be terrible. Moving over to fear and greed, it says it's at a 65, and this is up to date, but it really should be lower. We saw a big contraction today, and it's not reflected yet on the fear and greed index. You can see here market momentum. Big pullback there, probably headed back to the 125 EMA, which is currently at 53.31, and then looking at strength, sitting in neutral. Breadth still hovering here in extreme greed. Interesting to see that. Definitely want to see what that looks like on the charts later. Put call ratio continues to elevate, expecting that to push towards that 0.9 area, and then market volatility. Of course, we got a big spike there with the big sell-off today. We were looking for that. We knew we were elevated. We expected it to go higher, and that came through. And then safe haven demand, pulling back here a little bit, and looking at junk bonds, those actually stepped into extreme greed as well. So bonds have not been performing as strongly, and people don't see the risk in there that they probably should, which is why we're seeing junk bond demand still quite high. Moving over to seasonality, these first couple of days are quite bearish. You can see the average is a 1% down move in the S&Ps and the NASDAQ, with the NASDAQ being the underperformer here. Obviously, we got way worse than that, probably because we outperformed last month, so we're underperforming this month. But understand this is sideways choppy at best, and not a great time to be in markets typically. Moving over to that economic calendar, you can see that manufacturing data, not great. 48 was the number, well below the previous. Construction spending, also way worse. Manufacturing PMI, not great. Manufacturing prices, higher than we wanted, right? So not good there either. And then Atlanta Fed GDP, 2% versus 2.5. Again, another weak number. And the big concern here for me is this jobs data. This is a jobs data week. If we get bad numbers here on JOLTS report, and then we get bad numbers here on initial jobless claims, and then again here at the end of the week with the unemployment rate, I think markets are going to sell off significantly. So just keep that in mind. We do have some more manufacturing economic data here on Thursday as well, but the big one for tomorrow is the JOLTS report at 10 o'clock. Moving over to max pain, you can see 551.40 was the price, 555 was max pain, so we're already well below it. Put walls in here at 544 and 550. Not a ton of options, even though the put call ratio is very high at a 3. Total option 700,000, but the call wall there was at 570. We expected to see a push down from there, and that's what we're seeing. It'll be interesting now to see if this 544 or 550 areas end up holding. Small put walls are not enough to hold up price, but we'll see how it plays. Moving over to the charts, starting off with the S&Ps, you can see we got a big down day, 2.12%. Momentum continues to step to bearish. Got a little bit of a head fake there on the Friday session, retested that trend line, and now we broke down right to the next one, all in one day. Almost touched that 55 EMA at 5,500. At this point, you would expect this zone to break based on this momentum. It's probably going to carry to the downside quite a few more candles, something more like this, where you get about 6 more down candles, get some more consistent down moves, and then we'll see what happens after that. If this next zone breaks, then your next support would be down in these trends here, about another 2% lower. And then if that breaks, then you're looking at about a 4% move down to this next trend here. So basically 2% increments down to this next trend. And right now it looks like that first zone is going to break, in my opinion. And moving over to the short terms, you can see basically straight down throughout the session, touched that 55.12 level, got a little bit of a bounce from there. It's definitely extended. The RSI on that last candle is at 22.87, so big move on the day. Well below all the EMAs and SMAs on the hourly chart. Very much a downtrend there. And then extending out that trend line here on the daily chart for the SPY, you can see 555.12, And then you got the 55 and the 21 EMAs pretty close together there at 548.62 and 547.63. So potentially some support there, but then looking at that next zone right around the trend and that 544.01 level. Moving over to the Tasty charts here for the SPY, you can see we are in bullish conditions. Your ATR trailing stop is still down at 541.47. So you still have a little bit of room if you're trying to hang out in a bullish position here, which is not a terrible idea. We're still on this overall uptrend. You can see it's still up and to the right. This would be a pullback though. The big concern obviously is that this is a clear double top at this point. This is definitely a breakdown of this consolidation. Pulled all the way back to the 34 EMA at 549.97. Touched that level, got a little bit of a bounce, but really you're looking for a test of that ATR trailing stop, which is that 541.47 level. And then looking at that 4-hour chart, remember we've been in bearish conditions this entire consolidation all the way back here from 22 August, bearish conditions, and now we're at that 144 EMA after touching that lowest ATR band. Your price target there would be 548.79. Moving over to the NASDAQ here, you can see we were above this trend line going into the Friday. Thought we might get a little bit of a continuation, maybe a double top here. But then we got the gap down, fell, took out the 21, took out VWAP there at 19,018, and now we're at 18,958. Your next dynamic support would be 18,653, which is about another 1.5% down move from here. So we'll see if that happens. Momentum, step to bearish. Look at this RSI, looks terrible. Got the clean breakdown, clean retest, clean breakdown here. Take off the volume so you can see it a little bit better. Looks terrible, straight breakdown, probably headed to oversold conditions. And then again, looking at those short time frames, you can see hourly chart tested this zone here. Once it broke, straight down. Every single candle on the session on the hourly chart was bearish. Definitely extended once again down at a 20.54. Zone of support would be that 461.55 level. We are below that after hours, but on the day we did close above it. So we'll see if that ends up holding it all. You can see huge wick. Some buyers did come in on that volume. Something to consider there. We are at another lower low from this previous low on Wednesday of last week. But VWAP, it's in there. It could hang in there as support as well at 460.79. Interesting zone there. And even with that after hours price action, we are still above that level, so something to consider, but everything else looks bearish. Moving over to the Tasty charts here on the NASDAQ, this has always been a lower high setup. You can see it here, high, lower high, retested the ATR trailing stop, bearish conditions still. At this point, you've broken all the EMAs except for that 144, which is down at 451.60. So that's another $10 of potential downside until you hit some dynamic support. And then if that breaks, the lowest ATR band is sitting there at 435.71. So that would be another pretty substantial down move from there. But looking at the 4-hour chart, you can see we're almost already down to that lowest ATR band, which is currently at 458.20. So you have just a little bit of room there before you're hitting it. And usually that means we're going to see a little bit of a slowdown on this grinding price action. You can see it here before. Big fall, hit the band, grinding price action, catch a little bit of a bounce, rally up, and then once there's more room on that ATR band, then you see those bigger down moves like that. So something to consider. Could find a little bit of support in here, but of course everything looks bearish. Big volume coming in, momentum is bearish. ATR trailing stop also rolling down on the 4-hour, which is down at 476.30. Moving over to the Russell and the Dow, you can see the Russell also had a pretty terrible day, 3.06%. 21 EMA is what we were looking for as a zone of support if this consolidation broke, and it looks pretty clearly like it's broken at this point. 211.99 is that zone, right at my 212.10 level. After hours, basically flat. Momentum stepping down, RSI broken. So momentum seems to be fading there. And then on the bigger picture, keep in mind that this is a high, lower high setup now. Then we'll see what happens after that. This was a double bottom at that 197 area. Overall, I still like this as an uptrend, but you have to consider that lower high setup. And then looking at the Dow, also big candle, 1.43%. If we zoom in just a little bit here, you can see we touched that highly traded zone, which is right there at the low of day. Potentially an interesting zone there, right at these previous highs as well, but momentum stepping down, RSI broken. You would expect this to move down to that 21 EMA down at 403.89. Moving over to the Mag 7, we had this same kind of consolidation selling off here, and just like the NASDAQ, we took out the 21, took out VWAP. Your trend support now is down at 254.33. Momentum bearish, RSI breaking down, probably has more to go. My next actual horizontal support is down at 249.41, which gives you about another 2.5, almost 3% lower over the next couple days, in my opinion. And then we'll see what happens once this RSI gets into oversold conditions, which is where I think this is going. Moving over to Apple and Microsoft, you got Apple down 2.72%, big breakdown there. We talked about the wick and the rejection on Friday, big selling. And actually, Apple had one of the worst days on Friday. You can see Microsoft was up almost 1%, while Apple was down 0.34%. So we look at Apple as kind of one of those market leaders, and it was leading to the downside, a little bit of a preparatory move, and then everything else followed right to that 21 EMA, and that's where we are after hours as well, at 221.93, right here in this zone of support. The lowest area of that zone being VWAP at 219.69. If this zone breaks, there is a lot of potential downside, especially with this as a topping pattern with a lower high setup now on Apple. And then Microsoft, we've been talking about this one for a while. It's looked terrible. It's been grinding along this 200 SMA, and now it's broken below that once again. Your next zone of support is all the way down at 394.22, which is basically back to the lows from this previous move, or about a 5% down move from current price. Moving over to Tesla and NVIDIA, Tesla still cannot get out of this sideways triangle here. Tested the upper bound, pulled right back into the middle of the range. Momentum basically zero, RSI basically zero. So right now you would expect this to break down, but we're still in this triangle waiting to see what happens. After hours we're down about $1, and then look at NVIDIA. This is the big one everyone's talking about today. It had an absolutely terrible day. One of the worst days in a while, down 9.5%, down even more after hours. Continues to sell here. With the after hours move, it's closer to 11.5%. And at this point, you have to expect a retest of that 144, which is about 14.5% from current price. So about another 3% to go, at least until we hit that support. Momentum bearish. RSI has been bearish. Volume seems to be picking up on this selling. We talked about this as a lower high and a breakdown. It had already broken. We did get the inside candle at the 21 EMA, but that's why you have to be patient on these kinds of moves. Big continuation here, expecting lower prices to come. Moving over to Amazon and Google. Amazon actually hanging in there pretty well, 1.26% to the downside, still on this kind of downtrend. We broke it on Friday. We talked about that potentially hanging in there, and it did. It held that support, potentially a zone where we could see some kind of up moves in here. Amazon doing much better than some of these others, especially when you compare it to Google. This has been a big down move, bear flag, big down move, continuation here. 4% on the day, touched the 200 SMA there at 157.89. Talked about that being a zone where we could find some support, but at this point you would expect it to continue lower. Momentum almost bearish, RSI breaking down, volume ramping. If this zone breaks here, your next support is going to be 150.26. We still might find a little bit of support at this high back from January of 24. That'd be in the 154 area. But either way, I think we're getting a move of around 3% lower from here. And then if we follow through on my price target to that 150 area, that would be about another 5.25%, 5.5% lower. So I think this is headed lower. Google looks pretty bad. Moving over to staples and discretionaries, continuing to see that risk off market, new all-time highs here for staples, continuing to rocket higher. Momentum bullish, RSI bullish, volume ramping. Everything continues to look very good there. And then looking at discretionaries, still in this consolidation, it didn't break down as badly as some of the others, 1.37%. Still expect the 55 EMA to break at 183.81, and then if that zone breaks, you got the 21 EMA sitting there at 180.94. Moving over to oil and gas and financials, these both sold off aggressively. Oil and gas does not do well in a weak economic environment, and that's what we got on the data. So consolidation broke down, took out my level 135.07. Let's go ahead and extend out this trend line here, which gives you a potential zone of support all the way down here in the 128.80 area, right above my level around 128. We'll see if this continues lower. Probably will. This is a lower high setup now from this previous consolidation. And then looking at financials, this has been a rocket ship. Finally showing some weakness, down 0.74. Nothing crazy, and it's actually up a little bit after hours. Hit overbought conditions, and now we're probably seeing just a slight pullback in my opinion. Moving over to 20 and 50-day breadth, we got a big step down as you would expect. RSI is breaking, momentum rolling down. It's been rolling down, but it was hanging in there, and now that's broken. So we're breaking down to that 68.14 area. We talked about maybe hanging in here a little bit longer on the 20-day, but it didn't happen. So now this is broken. We'll see what happens. Is it going to do something like this, where you get a big move down, consolidation, big move down, or is it going to go straight down? Who knows? but something to watch. Zone of support is still the 200 at 60.96, and then looking at 50-day, pretty much the same thesis there. We thought we might get continuation, but that was a head fake there on Friday. Now we've broken all those levels back down to the 68.66 level as a potential zone of support, but again, momentum bearish, RSI bearish. You would expect this to flow down at least into that 59 area in my opinion. Moving over to the dollar. Dollar really did not move very much, 0.12 to the upside. You can see we did test some support, did test some highs, and we're right back into this kind of consolidation. We're testing the high back from Friday and Monday. Remember, the dollar did trade on Monday. It was just the US markets that were closed, so I'm testing those highs. We'll see if it holds in there. This is still overall a downtrend, but look at those three big bull candles. You would expect some pullback here, but a continuation rally is what I'm looking for on the dollar, which should spell a little bit of weakness on equities and fits with the overall thesis. Moving over to bonds, these continue to hang in there just barely, staying slightly inverted, 3.865, and on the 10-year you got 3.833, so again, 300ths still hanging in there. Did get back below this trend line with that down move today. Obviously, these are going to weaken with that economic data because we're likely to see cuts from the Fed, so yields are reacting to that. But you can still see 10-year higher than this previous low, whereas the 2-year continues to fall here, likely to make a lower low tomorrow. I still think we're going to see a normalized condition this week, which does put the timer on markets anyway. Moving over to bonds, J&K took a crater like everything else, so big gap down, big fall to the 21 EMA, about 1%, almost to this previous high. Everything looks bearish there, but look at TLT. We talked about this still being an uptrend. We talked about a zone of support there. Touched 96.50 to the penny, and then on the news today we got a gap up rally, ended up 1.3% on the day, and it's going even higher after hours, probably going to start this swing up to that next zone. What a head fake, really across markets and across the bond market here on government bonds. Moving over to the VIX, as you would expect, a big jump there, 37, almost 38%. Pushed through these levels. The price target was 22.50. Let's go ahead and extend out some of these trend lines. Obviously, we pushed through all of those. Stopped right here, 22.50, looking for that. Momentum swinging to bullish, RSI bullish. I think this has a little bit more in the tank. We talked about it being a higher low setup from this previous low. And that is now following through here, maybe even as high as 28.89. Could be in the cards, I think. We'll see how it plays. This could be an extended down move, so overall looks bad. Moving over to my accounts, of course, I lost a bunch of money, about $1,300. Makes sense. Markets were down a lot. Obviously, I didn't lose nearly as much as I could have. I had 200 shares going into the day, and that would have been about $3,000 if I sat on that all day. But obviously, I rolled down all of these calls pretty substantially, and then going into tomorrow here, I have a 461 for $3, and after hours, that's actually going down a little bit. It's almost out of the money already at 461. Watching those zones pretty closely. I can always put on more calls if I need to, and then I put on that long dated call. I actually put this on earlier in the session and then rolled it down a little bit. You can see 480 now for $6 credit on that. Very, very small deltas, just giving myself a chance. And then looking at the IWM, rolled to 213 for tomorrow's session for a $1.30 credit. After hours, that's basically flat, down just a couple of cents. So overall, I was able to mitigate a fair amount of the loss, but not as much as I would have wanted to. Let me know down in the comment section what you think of the economic data. Is this the start of a bigger down move, or is this another head fake like the one we saw on Friday and we're actually in a consolidation? I think that's pretty unlikely, but anything is possible in these markets. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.